Good morning, everyone. Nice to see so many of you here. Thank you for joining us for the session. Hopefully there aren't too many hangovers from last night's party. But this is a topic close to my heart. So for any of you who didn't see the intro sessions yesterday, I'm Emma Swinnerton. I'm head of Flexible Workspace at Cushman & Wakefield. And a lot of what I do actually is advising landlord and investor clients on their flexible workspace strategy and how they implement that strategy. And a lot of that is actually around how they work with flexible workspace operators on any arrangement which isn't a traditional lease. So this topic is kind of very key for me, and I think as I touched on yesterday, we're definitely seeing a shift in terms of both landlords and operators moving away from traditional leases. So we want to take the session really to talk about what some of those different structures might be, what are the challenges of implementing some of those from both sides of the coin, and what the opportunities are in terms of growth from an operator's perspective. So I've got a fantastic panel of guests here with me today, and they will do a better job at introducing themselves than I will. So I'm going to ask each of our guests to introduce themselves, talk a little bit about their Flex brand, and also what models they're using to expand their business currently. So if I start at the end, Roman, do you want to kick off? Sorry, I did that wrong, didn't I? John had the microphone.
Okay, hello everybody. I'm Roman, I'm working for Brew & Co, a French company. And we started in 2016. And we are now running 17 offices all over France, and we used the three strategy to develop, which was profit sharing, franchising contracts, and managed service with public administration. So we'll be happy to discuss more about it.
Good morning. My name is Ian. I come from VentureX, a USA company. Recently expanded to Portugal with Interact Holdings, which is the mother company of VentureX for Portuguese market. So we come from a franchising model, which is significant, important for the strategy that the mother company has in terms of developing real estate in the Portuguese region. So we'll be happy to comment more about the benefits of the franchising model in this panel. Thank you.
Hi, I'm Ashok. I'm heading the development department and real estate for Wojo. Wojo is a co-working operator owned by Accor Hotels and by Bouygues. So to start with, we stopped signing leases since 2019. And since then, we just develop ourselves either by management contracts or franchising.
Hi, good morning. My name is John Milhado from Amsterdam. Glad to be here and see so many familiar faces. I'm in this industry already for over 30 years, so I've gone through several different ways of working with landlords. So almost all the items which are on the program I've been using and learned my lessons, positive and negative. I started in the first business center in Amsterdam. I'm glad to see representatives of Euro Business Center in this room. There we had a normal lease with at that time, flexible landlord who was prepared to give discounts in the beginning, but we had a normal lease. And as we were the first business center in Amsterdam, nobody knew how that worked. It was very successful. We grew and added buildings over the time and also added other locations. Then I worked a while internationally, helping European colleagues to grow, to find buildings, to train staff, etc., etc. And then with my former partner, Jeroen, who's also sitting here, we decided together to grow color business centers. And we used a complete different concept, the management contracts. At that time, the real estate market, it's about 8-9 years ago, was not very good, many empty buildings, and we could really profit from that because there were landlords in panic, didn't know how to fill their buildings, And with our concept, we together made it a success because we were running the reception area, sometimes catering, meeting rooms, and 1 or 2 floors with flex space. We filled that quite fast because there were a lot of startup companies at that time. But in the same time, we were able, together with the landlord and the brokers, to fill the rest of the floors. So it was very successful for the landlord, for the people who were using the place, and for us. So we grew within a couple of years from 7 to 18 locations. We became the number 2 in the Netherlands. So management contracts at that time were very, very successful for all parties, and that's the main thing. When the landlord is happy, the tenants are happy, and you make some money, then it goes well. We were then approached by Regis, who thought that we were growing too fast. So in the end, we sold our 18 locations to Regis. And 4 years ago, I set up a new company. And then I come to the third activity in having a relationship with landlords. We now service large office buildings where we combine reception and catering, plus meeting rooms, and sometimes also some flex space. There we have service contracts, so again another relationship with the landlord, and also that works well because we take care of all the basic things in the building, and the landlord is happy that that is organized. The tenants are happy because they get good services like reception and catering and meeting rooms. And when it's successful, we also make some money and can grow further. We have got now 9 locations, and based on the needs we see in large buildings, we expect to grow very fast further with supplying these services.
Brilliant, thank you, and a great range of experience today. So I'm going to start with franchising. A number of you have talked about franchising, so let's dig into this in a bit more detail. I would be most familiar with franchising from McDonald's or Starbucks or one of the well-known retail brands. So maybe, Ian, do you want to start? How does this work in a flex kind of environment? How does franchising work from a VentureX perspective?
Well, franchising is, I would say it's a brilliant model. Let's say you want to start a business, okay? And then you have no experience, no knowledge. You basically do not understand the industry. What franchising does is it gives you insight of the industry. It gives you understanding. And the brand that you're acquiring the license to operate the franchise in that specific country will direct you, transform you, it will represent you, it will give you training and ongoing support. You'll basically have all the information that you need to operate the business. And before and after that, it will lead you also to training, which can also help you generate sales, improve revenue, and also it can give you a brief introduction on how you can also scale your co-working business. So franchising is a brilliant model. Let's say you want to buy a house, for example. You want to buy a house, or would you like to build a house? So what franchising does, it gives you a built house. It's a fully built model that you have to just get into a training, understand how it works, and operate to ensure the success and the scalability of the business.
Okay, that's great, thank you. And if I was to put myself in the shoes of the landlord, how is it different if I'm contracting with a franchise business versus another operator? Ashok, Roman, do you want to answer that? How does your contract with the landlord differ?
Well, it depends, but there is no very much difference between a franchising contract and profit sharing for us, because we, I would say in profit sharing, we will deal with the cost of the investment to do everything in the amenities for the benefit of the tenants, and in franchising contracts, you will have less, the landlord will have more efforts to do the capex and the managing fees of the building, and to go. What did you say? Oh, excuse me. What's your name? I forgot. No. Jan. What Jan said, sorry. In franchising, you also have the power of the brand you're going to be in contract with, and it will help you to do business faster than if you started alone.
Sorry, but I have a different point of view. Before talking about franchise, we need to come from where we were like 10 years ago, 20 years ago with the co-working model. We started with leases. Before coming to franchise, there are different steps. So from a landlord point of view, franchise is not yet something that we can develop because we, as an operator, need to make sure that the brand and the operations are pretty easy and a very transparent ecosystem. Today, I'm not sure yet in the flexible market that we are all in, everything is transparent. Why I'm doing that? I always compare this sector to the hotel sector that I'm familiar with because we are being owned by Accor. So Accor, before coming to the franchise model that they are in now, everyone started with leases. And when you start up a business, you have to start up with leases because you need to give guarantee, security to the landlord. You cannot just come and say, okay, I'm going to do a franchise. If you come with a franchise model, that it means that you have already proved yourself. There's a brand behind, okay. So if it's Regus, IWG, yeah, I'm pretty sure some landlords can go through that. But it means that the landlord or the operating company knows how to operate the co-working services. If not, it's going to be tough. So what we started doing is we started, like everyone, with leases. Then we switched to profit-sharing models with them, with minimum guarantees. Then we switched to management contracts. And now we are switching to the franchise model. So I think it's not yet very popular within landlords to just go on and say, look, I'm going to take a Wojo or whoever it is and do some franchise. That's my point of view.
Yeah, I also have a different view on the possibility of franchising in our industry. We have seen Regis 4 times starting a franchise concept. They failed 3 times, and last year they started again. It works now in several countries where they gave the franchise to a complete country or a complete area. But before, I've seen franchise centers from Regis all very close to the existing centers of Regis. And the existing center of Regis was filling up quite fast and the franchise went bankrupt. So Regis and some other big players are able to offer a franchise system because they are known. When you have a small group, you can do franchise, which helps the person to start up, but there is no brand name which is known internationally to support that. So you learn a lot from the person or the company which gives you the franchise, but in the end, the name doesn't help you to be more successful than when you do it on your own. And when you look at the small existing ones, they are local franchise groups, but I don't see any advantage compared doing it yourselves.
Okay, so I think that's a good debate. I think from my perspective, it feels like franchising is actually really has the most implications for the operator of the space. But then to acquire that space with a landlord, actually it doesn't really matter from a landlord's perspective whether they're contracting with an operator or a franchise because they still have to agree what the terms of that deal are. So maybe if we kind of move on from franchising, if that's kind of clear to everybody, and think about some of the other structures, and I think, Ashok, you described it very well in terms of the options essentially being, if we're not doing a traditional lease, the main 2 options really are to have a kind of profit share lease with a low base rent and some kind of profit-based top-up, or a straight management agreement. So does one of you just want to kind of talk about the kind of key differences between those 2 means of contracting space?
Yes, I'm happy to start. As we do have had a lot of experience in management contracts, we have proven to make it a success. The nice thing is you share the risk of the empty parts of the building with the landlord. Of course, when the market is great, like most countries nowadays, then it doesn't matter a lot. But we've seen during COVID that some of the buildings were almost empty or 50%, and all the colleagues and many people in this room were losing a lot of money. And the landlord was just sending 100% bills every month. There were a few who were giving discounts, but most of them said, it's your problem, we have a contract and you have to pay. So even several went bankrupt during COVID based on the contracts they had. What we have seen when we did the deals with the landlords, they were paying for the investment, which we paid back over the years. But they had the shared risk, which was, and we could explain that very well to them. The first 2 years, they were not getting the full rent. But after 2 years, when we came to 75% occupancy, we were able to pay, when you compare it to the normal rent, the good price. And the good news was that sometimes we were able to fill the place up to 90-95%, and they were getting more money than they would get when they would have a normal rental contract. So that made them, of course, very enthusiastic. I would say we didn't succeed in all buildings, but many we did. And that helped the landlord to give us more buildings because they understood the concept. And we were very open in our communication. Every month we gave detailed financial information and also explained why some months it was not successful and other months why it was very successful. And that really, but you need to have a very good relationship with the landlord, and they need to understand the product you are offering.
To be clear, John, you're describing a management agreement where there is no base rent at all, no guaranteed rent in that arrangement.
Correct.
Great. We did just have a question.
No, we were paying a percentage of the income we were getting to the landlord. So the first 2 years, they were getting a very small amount. They were losing money, we were not making money. And as I said, in the end, they were making more money than they would have a normal lease. No, percentage of the revenue after deducting all costs, including our management fee.
But Ashok, you mentioned that there are profit share leases as well.
Yeah, maybe just to close the franchise model, I just wanted to, so today Wojo is like 100,000 square meters, okay, and we have most of our centers been signed yet through leases because we started in 2015, the operations. I think now we should be around 10,000, 15,000 of square meters, either in management contract, either in hybrid leases, okay? And one franchise model that we've given is in Africa, because for us, based out of France, it was too far to do the operations over there. What we wanted to make sure when you go to Africa is that because you're going to give a franchise, a brand, you make sure that it's been respected and all. So we wanted that landlord to hire someone who comes from the flex operation services, because in that way you have a kind of security for your brand and for the franchise model that is going to, the business will be well run over there. So coming back to the management contract, what we've signed one in 2019, so that was before COVID, and we signed one in the CBD of Paris. And the model that we signed with them is they support all the cost, even the capex. Okay, so we didn't put a single euro on the table, but what we guaranteed is that over the next 10 years, which was the length of the contract, they would benefit 15 to 20% more of what they would have got if they have done a lease with a tenant. Okay, so as you said, in the beginning, you know there's a ramp up in our business. You don't start with 100% of occupation. We started like 65%, so of course everyone is losing money at 65%. You can just cover your cost, okay? But then we were stuck with COVID, so it was a bit tough. But since 2021, when people came back and the site was pretty well located, and we just grow up, and nowadays we are trying to get more than 105, 110% of what would have been the rent. Okay, so it's a challenging model because you have to have a landlord in front of you who understands the business, because it's not easy. But in France, I've done this with a private company, private investor. There are some tax-free facilities in doing this kind of models. So that helped a lot for them, and this is why we've done that with them. The other experience that we had was last year. We signed a hybrid lease with an institutional investor, and what they wanted is the upside. You know what's happening in the real estate market today? There's no lot of investors buying or selling, so the only way to gain in value is maybe to upside your rent. And by giving hybrid models with minimum guarantees, if you can provide 10, 15, 20% more than what is the normal market trend, then the value of the building is still higher. So this is what we've just made in the last years.
I'm going to come back to that point on valuation maybe later on, but Roman, did you want to say anything earlier?
Yeah, I wanted to share our experience with managed service. We are now getting into contracts with public administration, and is it true that it is nice that they support the cost of the operational, and but what we see is that we can focus on our business and running the office and helping them, which is not their jobs, to help getting a big occupancy rate. And what we are thinking is that there is many buildings. So we are talking about the building crisis, and there are many buildings in France that they are not occupied and run by public by city, and they are now getting in touch with us to help them think about a hybrid model and help them run the old space into a new co-working space to be able to do some economic growth and help them in a good way to reduce the cost of the building and make it profitable for the people and for the city.
Well, I'm going to comment about the experience that we encountered in the Portuguese market. For the mother company, VentureX Portugal, when we signed the master license to bring in VentureX to Portugal, we actually had some negotiations with landlords, which they required a significant background of the company that was going to operate the space. And if we were just a newborn in the market, it would have been harder for us to sign the lease with them than coming with a franchise, which is an international recognized brand. So that was something that was a point of advantage for us. Obviously, for the model, there's a cost and benefit analysis, but we believe as the mother company of VentureX Portugal, the best strategy for us for the region was actually bringing a franchise, because it's an international brand and it's widely recognized. There's a system and ongoing support. So it was a perfect model, and it was the best for us to better negotiate with the landlord. Obviously, there are differences, as you need to pay the fees that come with the license. But on the long run, if it comes to a point where you have to negotiate with the landlords, it's pretty much a point of advantage. That was our experience, and we're now closing the license, the lease agreement. We're hoping to launch in the next year.
Okay, brilliant, thanks. So if I just recap some of what I've heard. So if we talk about the differences between a lease and a management agreement, right? So in a lease, we're saying the landlord has guaranteed rent, but there is no guarantee in a management agreement. In the lease, the operator normally pays the capex, whereas in a management agreement, the landlord generally pays the capex, and that may or may not be paid back through the terms of the deal. But in a management agreement, the landlord should expect a higher return. So I've heard anything between 10 and 20% above what they would normally receive over a traditional lease. But they have to accept that that is really over an average of a 10-year deal term, and that they might have to accept that during the early years or during difficult times, say through the pandemic, they are at risk of having a lower return during those periods. Is that fair, what I've said?
It's absolutely correct what you say. I have some things to add to that. What we have seen, especially in larger buildings, that when we were there and doing the reception and the catering and the meeting room at the ground floor, and there were 20 floors above there, the empty floors were sold at a higher price than the building next door, because the new tenant was very happy that was already a reception and catering and meeting rooms, which saved them money because they didn't have to have their own receptionist, they didn't have to organize their own catering, and they could rent less space because the meeting rooms they could take from the service provider downstairs. So in the end, the most landlords who have worked with us, they said, okay, it's great that we made some money with you after a couple of years, but what was more important for them is that they could fill their building much easier, much faster, and even at a higher price. So that made them very happy, and they were not worried how fast we were growing.
Sorry, can I just, I'll save some time for questions, but let me just ask one thing, because you've opened this up, John, here, is one challenge from a landlord's perspective is when they're dealing with operators, and I think Roman and Ashok, you both touched on this, where you have a mixed portfolio, so you have some buildings that are on leases and some buildings that are on a management agreement. Landlords are always going to be nervous that you would direct your customers to the buildings where you've got the most exposure, so there's where you've got a traditional lease. How do you respond to that as an operator?
We didn't have many centers very close to each other, so we have no experience with that.
It's a good question, actually, but there's two different ways to respond to this. First, you should make sure that there's no two centers in front of them. At least you have a perimeter of like 500 square meters or 800 meters, depends. So we make sure that there's no need to put two buildings, next door. That's the first point. The second point is we have our own sales team, okay? And what they need, those guys, they need to get paid. So either if they sign in our building or they get signed in the building of the manager, it's the same thing. At the end of the day, they need to sign and get their fees. So this is one of the way that we make sure and guarantee the landlord that there won't be any problem between two different buildings. But once again, it's just common sense not to have two buildings next doors.
Well, we're just, as I mentioned, VentureX is a new company in the Portuguese region, so we do not have experience with dealing with that. I will pass on to my colleague here.
Yeah, it's about common sense, and our buildings are not in the same neighborhood, but it's always nice to be able to direct people when you don't have the capacity to respond of the demands to one center, and to be able to give them the possibility of to go in another one. So yeah, it's a common sense.
Okay, thanks. I saw there was a couple of questions.
So pretty much directly to the point of you. In our experience, the landlords always have a building valuation issue if they are not having a guaranteed fixed rent. How did you approach that?
Correct what you say, and that sometimes makes it difficult with some landlords to work, especially as they plan to sell the building within the next 3-5 years. So absolutely correct. That's why we prefer working with landlords, which very often are family companies which keep the building for 50 years because they don't want to sell, and they are more relaxed having us in than the companies which are going to sell fast. What some have done to solve this problem, and we help them with them, you can have a limited company above that which has a certain lease, which is paid or not paid, but at least they have something in the books, Whether that's always legal in every country, I don't know, but I know many landlords like that way of doing it because it solves that problem. And what we now see, but for sure you know that better than I do, the taxation of buildings when there is only 10 or 20% flex space in that building, it is accepted being part of a normal lease for the whole building. When it's 50% or 100%, then of course you come into difficulties and it will be more difficult to get a good price for it.
Yeah, if I can just add to that, I think there is very clear methodology for how to value space where there is no traditional lease in place. And obviously, a lot of that comes from hospitality. It's very standard for hotels to take space on management agreements. I think the office industry has been slow to adopt that methodology, and the biggest challenge that we have is there is no transactional evidence, right? So even in the UK, which we would argue is the most mature market for this space, the valuers are all aligned as to how you value the space, how you flow that additional operating income through to the investment yield, but nobody has done it. Nobody has sold a building with a flex space in it, and part of the reason is, exactly as John said, the valuers take the easy way out. So if it's a small proportion of the building, they'll just wash it through the overall valuation.
Yeah, completely agree with you. And the issue is not the landlord valuation, it's the method of the valuation. And this is what we are trying to do in France. We've just put three big valuers, CBREs, the GLL and all, just to explain them that what did you do when we started the hotel industry? Because it was the same issue with the hotel industry. You cannot value the same today when you have a management contract. It's not cheaper when you have a management contract because it gives you much more revenue than a traditional lease. It's the same issue. The problem with the market, as I said earlier, is that it's still not transparent. So we don't have any benchmark in it. So once we will go through the next years and we'll have some benchmarks said, okay, 2,000 square meters in CBD Paris will give you this amount of revenues, then you can capitalize on it and bring value to this. But it is still not the time for it. So I fully agree with you. What we do in France, we mostly develop with family offices because we know that they are not going to sell their buildings tomorrow. It will be a long-term model. If you go within the institutional investors, they would go rather for, as I said, an hybrid lease where they have a 50% of guarantee, rent guarantee, and then a 50% variable, and they will apply a different yield on those 50%. Okay.
Sorry, question there, thanks.
Yeah, I have a question regarding the business model. So you were highlighting some numbers, but let's say, generally as a blunt number, the industry, the co-working industry can provide like 10-15% above the rent. This, I agree. And the management agreement, what basically they are doing is like saving the G&A, yeah, because you are taking place of the G&A. So I don't know if like you can share this information, but what is like the generally terms of a management agreement? Like you take from the turnover, you take from the turnover and the bottom line. Like, let's say generally speaking.
You mean in terms of fees? You mean, okay, in terms of fees. Different types, okay. If I can share with you mine. We'll take a base fee, would be on the revenue that we generate to operate the building, okay. Yeah, part of it. And then we'll take some incentives on the margin that we provide, okay. So we take only incentives if there's a margin. If there's no margin, no incentive. But at least with the base fee, you can cover your operations, okay.
Yeah, so in this way, basically, you have no risk, right? Because you are getting paid anyhow as part of the OPEX. The landlord has to pay all the capex, right? So all the risk is on him. So how like the landlord, it's like challenging to explain the landlord because you are coming to the landlord telling him, listen, you can trust on me, look what I did. Like if the rent is X, I can provide you X point, I don't know, 15, right? You will pay the capex, but there is no guarantee on that. So how do you challenge it?
It's a difficult one in the beginning. our first 7, 8 centers, we had to do a lot of work to show the landlord that we would make it a success. As soon as, and we were lucky at that time, it all went very well. So we could show them, okay, these 6 centers are already profitable for the landlord and for us. They could look at our figures. We were very open with that. And after that, it was easy. They saw the figures. Oh, that's what I want, please, because my building is already empty for 3 years. So please come in. Can you start tomorrow? So that worked out well.
Right, but if you don't have those, if you don't have those 6 centers, though, I feel like Ashok, you said something about a minimum guarantee, and so maybe that's what
Yeah.
they'll do. Give the
That's why
landlord
I
assurance.
was supposed to say,
Yeah.
if you're not on up to the figures that you have provided, then you have your minimum guarantee, which can be taken. Okay, so that's a proof that you need to run your business, otherwise you lose your money. So it's not as risky as the landlord. Fully agree. Okay, but still, for an operator point of view, there are some cash out problems if you don't, if you're not up to the figures.
But it depends on which buildings you are, and when it are empty buildings, the landlord is already suffering for some time. So they have no problem in doing a small investment and say, give it a try. And then after 2 years, it's a success or not. And we were happy that everything went very well. And since then, they came to us asking, can you also do that building? Depends on how fast you fill it.
I think Roman has a question, but I think also, just to follow on from that, John, one of the things that we see is that actually even with an empty building, you're still asking some landlords, we talk about a small investment, but on 2,000-3,000 square meters, that could be 2-3 million euros, quite easily. And that's not necessarily a small investment from a landlord's perspective, particularly at a difficult time. So one, I think, of the main challenges is how do you overcome that and asking them to make that investment up front.
Well, for us it's a bit different because we are going on public market for managed services, and it's not fully about rentability. It's more about providing services to the population. So we don't have this kind of problem about convincing a landlord on his investment for now. But when we are going on private, we do manage to go profit sharing and see what we can do on the lease. But for managed service, we go on public and we try to give additional services to the people, to the city.
So on the capex side, a co-working center is, if you take out your common parts, it's still offices. Okay, so this is what the main subject is about when they are talking about capex. We're just going to put the same kind of carpet. It's going to be the same partition walls and all. So if the business is not going on, okay, and we are stuck with it, okay, if you need to put back the building on the market, you don't have to take out everything. Where most of our business is, as we spoke yesterday, is dedicated office. All the hotspot that you have is pretty small nowadays in our business. And this is what we saw yesterday in the business. So from our point of view, when we discuss with landlords, when they say, okay, I'm going to invest 2 million, 3 million, and what's going to happen? The one possibility that they have, if we are not up to the figures, then we need to go out and pay a penalty. Okay, we're not going to go just out without anything. Second point, we just said, okay, if we go out, you can market the building with the current fit out. Okay, so I'm not sure it's a big question yet. It's more about what is going to happen if the operator failed. That's more the issue.
Do you have a question there? Sorry.
Yes. So most of you are, like Emma said before, probably the UK is the most developed market in Europe, at least Paris as well, Netherlands, etc. So my question is, because I'm coming from like what you would consider an emerging market, and you guys have done quite a lot of things like publishing data and how it helps everybody, etc., etc.
It's not about the semantics of the ranges of is it going to be 10%, 15%, is it going to be revenue, what is the fee? I mean, those are probably really specific, but what were the things that really made them actually go to that stage and discuss those?
In our case, it was easy. Most buildings were having a problem. And we came in and said, we solve your problem. And they knew that would cost them some money in the beginning. And you mentioned, okay, when you have to prepare 3,000 square meters, we said, okay, give us one floor, 1,000 square meters. When we're successful, we grow in the building. And in the end, we had some buildings with 5 floors. But we did it step by step, and the investment also went step by step. So if it's a building in the center of a big city, beautiful building, top quality, you will not be able to sell this product. You have to sign a lease, and you might be lucky you get 3 or 6 months free. But all smaller towns outside the big city go for a management deal, and for sure you'll find one.
There's one way to approach the landlord also, is the services you're going to provide in the building. That's a big game changer for them, because they know that the market is changing. The office market is not as the one we know before COVID. Everyone is having a challenge to bring back the staff in. So by bringing services, saying that you're going to create a community, a barista, coffee, managing the meeting rooms and all, that's really something which strikes them. So if you go with that door, you might be able to convince.
So I just looked at a couple of your websites, and I saw a shot that you guys are having quite some real estate in the central business district areas. In comparison to Bureau & Co, I think it's more in smaller cities in Paris, right? Did you manage to get some other deals than traditional lease in central business district kind of areas?
Yeah, the one I said, which is in the CBD. It's called Gare Saint-Lazare, so it's really CBD. We've done a management contract, but it was a private investor. And we went on a long-term lease management contract agreement with them. And for them, what was interesting is the upside that we could have provided in comparison with a traditional lease. So that's the issue.
You mentioned hybrid model and management contract models.
Sorry, we can't hear in the back. Is it possible to pass over the microphone for each question, please? Thank you.
You mentioned hybrid models and management contracts. What is the main differences between those two models regarding costs, incentives, and like a business, just to understand it?
Management contract, you don't take a lot of risk as an operator. In a hybrid lease, you have a minimum rent that you need to provide whatever happens. Okay, so there is a fixed rent, which is normally around 50% of what the headline rent. Okay, and then there is 50% of variable rent depending on the business. But in the hybrid model, you will have to take in charge capex. In management contract, you won't have capex. It's a package. You have to, when you're on a hybrid model, you have to negotiate a package. Depends what is the package you are going to put in fact.
Hey guys, if you decide to start a franchise model with your business, how do you set up the right franchise fee? So how do you come up with the fair amount to get the franchisee on board?
Sorry, is your question, when you mention franchise fee, is it you selling back the license in your region? Is that what you're asking?
Yeah, so if you approach somebody and say, hey, do you want to run our business, right, as a franchisee, how do you set up the right, basically, investment? So if you say, well, you need to pay us 100,000 euros to run, basically, our...
Well, with our experience with VentureX is we acquired the license, so that means they set up a price, and we have to pay them royalty fees monthly. Okay, so that can vary region to region and market by market. So what VentureX did with us is they set up a price for the Portuguese region, which is a feasible amount for Portuguese local operators for the co-working industry. And they set up a royalty fee as well for the first year, so it grows year over year. So which shows that the VentureX is trying to give us the first 3 years of operations at a lower, let's say, price for the royalty fees, and then it grows year over year. So that question it can apply for an independent brand that's just starting, but for us that we acquired the license, that's how it's set. We also we also plan to sell franchisee licenses in Portuguese in the Portuguese region. What we're going to do is we're going to review with VentureX, and we're going to try to adapt to what the local businesses are able to invest and are able to also scale it so that they can grow as well in the market.
As you said, there is a brand fee. So before starting franchise, you have to have a brand. So there is a brand fee, but then depends what the services you can provide. If you have a platform which can sell your desk, if you have a booking system, if you have an app, depends, and then you can add different kind of fees in your franchise model.
Sorry, just to add one more point. And I think also one of the most important factors that franchisors have to do, and franchisees as well, is bring in strategic partners to work alongside with you. You need to have, for example, for your members or for your franchisees, you can bring in consultants to also help the operators and the members to encounter and face the difficulties of their private businesses. You can also bring in gyms or other any value-added offering that it can bring to the business. It's important for you to bring as a franchise because then it tends to be more attractive for an investor and for a member. That was my point. Thank you.
Brilliant, thank you. I'm afraid it feels like this session could go on for another hour, and really appreciate all of the engagement and the questions, but I think we're well out of time, so I'm going to have to draw this to a close. But feel free to continue the debate over a cup of coffee, and I'm sure any of our panelists here will be more than happy to take your questions. So thank you very much, everybody, and enjoy the rest of the day.